What's up, guys? This is Rustik, and today we're doing a pre-recorded episode of Pre-Game with Rustik. Normally, this is a live feed in the Discord that we do with questions and answers as well, but I haven't been feeling great today, so I wasn't sure if I was going to get to doing the live feed at the normal scheduled time. So I am going to be releasing this for the premium members in the Discord for early release, so you guys will have access to it before anybody else, and then I'll publicly release it on YouTube on Monday after the trading session. So if you want early access to this kind of stuff, click on the links in the description. The Discord links are in there, as well as links to some of the other stuff as far as like how you could support the channel, social media, where you can find me, and other things like that. So go ahead and check those links in the description below. If you could also like the video, subscribe to the channel, share with your friends. It does really help get the Rawstocks name out there. We are a fairly new YouTube analysis and Discord, and so the more help we can get with people who support the channel, the better. So let's go ahead and jump on into things. So again, this is normally like a week ahead, so this is how to set up your Smart Money Concepts chart going into the next trading week. So the first thing we do is we grab our ICT Smart Money Concepts time frame analysis. You can find this at theproptrader.co/ICT-smart-money. I will leave the link in the comments below. But again, that's theproptrader.co/ICT-smart-money. That's a website, for those of you who don't know, has some useful ICT tools. It's kind of a cheat sheet for ICT stuff. It has the Fibonacci retracement settings for optimal trade entry with the scale out fib level extensions, has the Smart Money Concepts time frame analysis, which we use for our week ahead, setting up our week ahead chart. Also has some information about Power 3 and ICT concept rules, and then all of the abbreviations for our ICT concepts and terminology. So a lot of you guys are like, hey, what does this mean? What does that mean? You can find the abbreviations on that website as well. So again, I'll drop that link in the comments below if you want to check it out. So we're going to grab our ICT Smart Money Concepts time frame analysis. To put this on the chart, you just do like a screen snip of the Smart Money Concepts time frame analysis from the website it provided, and then you can just paste it right into your chart. So we're going to start with the weekly time frame. On the weekly time frame, the first things we're looking for is to identify the next draws on liquidity. DOL is draw on liquidity, and those draws on liquidity are going to be to buy side liquidity, BSL. SSL is sell side liquidity. EQH is equal highs. EQL is equal lows. FVG is fair value gaps. Okay, so we want to have our chart on the weekly chart, and then we are looking at the weekly concepts time frame analysis, and we're going to identify these. Now, for those of you who are beginners, I want to give you a quick tool that I have found to be useful, and that is an indicator called Liquidity Levels MTF by Sonar Labs. Okay, that's Liquidity Levels MTF by Sonar Labs, and I will show you what that looks like. Right here we have that. I haven't been using this in other videos, but I'm going to show you guys because it's a nice little cheat. Okay, you can set it to a higher time frame on a specific time frame. It's going to map out the liquidity levels, leave these the same. It'll show whether those levels have been mitigated or not with candle closes. There's some other settings you can check. It'll give you your high and your low levels. You can also give you boxes if you choose that. So there's just some different settings that you can pick. But anyways, that's going to give you, like right here, it's going to give you the sell side liquidity here. It's going to give you the buy side liquidity here. You can see some levels of liquidity over here that have already been mitigated. Same with this one right here. Gives you a level that's been mitigated. So little trick if you want to use that. Can be helpful so that you can start to identify where some of those liquidity zones are. Also, you can see this week I have my previous month high, previous week high, previous day high, and lows on there. That's going to be found in your Smart Money Concepts tool, and that's Smart Money Concepts by Lux Algo. Okay, I have a lot of the things turned off right now, but what I have turned on right now is the daily, weekly, monthly high lows. Okay, and the premium discount zones. And I have them in black, in dark gray and light gray. And you can see those here: premium, discount, equilibrium. Okay. Another thing I have turned on right now is a trend line, an automatic trend line. It just gives you an idea of what the trend line looks like. It's not necessarily always accurate, but it's just something that will help map out some of the most recent trend lines on all different time frames. So those are the indicators we're looking at. I also have drawn out this bear trend resistance and this bull trend support, which has us in a very large symmetrical triangle. So when we're looking at the weekly and we're looking at the next draw on liquidity for buy side or sell side, we have those right now. Our indicator gave it to us, but I will label it so that you guys know. This is buy side liquidity. This is sell side liquidity right there. And so we have those different levels mapped out. And then equal highs, equal lows are fair value gaps that are going to be of interest to us. So we have fair value gaps all in here that has been traded into. And I think what we'll look at is we'll look at two different ones. What we'll look at is this one here that has not been traded back into. And I'm going to just do it with levels. You could do it with levels or boxes, however you please. Okay, and this one we just came down to, which also set an equal low in this candle wick on the weekly time frame. But we have this fair value gap here on the downside, and then to the upside right here we have a very large weekly bearish fair value gap, and we are inside that currently. So what you could say is that we are drawing on this bearish fair value gap. We have not really drawn into this bullish fair value gap right here. So those are two different areas that we could be drawing on liquidity, currently drawing on this weekly bearish fair value gap. And then equal highs or equal lows, like I said, right here we have equal lows. And those are in this wick here from Monday in October, and this wick here in May. Was that May? Yep, May. So we're going to say equal lows there. And that's what we got for the weekly time frame chart. Okay, and then we're going to move to the daily time frame chart. On the daily, we're looking for key levels. PD means premium discount, so premium discount arrays, optimal trade entry, and then daily bias and high time frame points of interest. So let's drop into the daily chart. Zoom in here. When I zoom in, I like to look for the areas between the most recent premium and discount range on the chart based on what the indicator is telling me, or the highest swing high and swing low of the current range that we're in. So we had a down here. The reason why it doesn't choose this low is because we had a swing low, we had a swing high, came back down, and then we had a new swing low. So then we had another swing high. So it's going to say that range is our range right now of premium and discount. You can take any swing high and swing low if you want, but this is nice because we're still within this range. We haven't broke above or below it. And so when we're looking at, let me grab my, there we go. All right, so when we're looking in between our range, our current range, our premium discount range, and we're looking at PD arrays, optimal trade entry, daily bias, high time frame points of interest. Okay, so what we're going to look at is right now, where are we in the premium and discount? Okay, this is equilibrium, premium, discount, currently above equilibrium. So that would be in the premium area. So premium arrays are going to be anything that's going on above the current equilibrium, and then discount arrays are going to be anything going on below the current equilibrium. Okay, so a couple different things that we want to pay attention to right now is that we have a premium array, right? But it is on the sell side, and that is the previous day low, which we have not currently taken out. So our indicator gives us the previous day low, but we want to have it here just to extend it across, because that's going to change, within every day. And so we want to be able to drag that horizontal level out. But right now it's labeled as previous day low, and that's going to be Wednesday's low because this is based on Friday's price action. Now what we're going to do is we're going to move that to Friday, because Friday's already happened. It's not going to give us this until Friday's price changes, or until we move into Monday's session. It will move this previous day low to Friday's price action. And then what we'll do is we'll look at, here we have Wednesday's high, and then we will put Wednesday's low, or Friday's high in there, so that come Monday, we're looking for price to break above or below Friday's previous high and low. And so why that's going to be important is, one, it was a small day. We did not break above or below Wednesday's price. Thursday was a holiday, but we now have a small range. So we can look for, on Monday, for price to break out of or below, break down from Friday's range. So that'll be important to know that. And then other things that we're going to be watching for is right here. We have our previous week low coming in at 211.76. So that's a discount array. Okay. We also have sell side liquidity coming down here in this swing point, which also happens to be right at kind of a previous gap level. And then on the premium and the buy side, again, we have last week's range. We have last week's range high over here at 244.17, and that's listed as previous day high, but that is actually previous week's high. And then we have the buy side liquidity that's going to come in above here at not last week, but the weeks before's high. Okay, and then we also have one more internal sell side liquidity level right there. So if we start trading down and we break Friday's low, and then we break Wednesday's low, we'll be heading to Friday the 17th's low, and then we'll be heading further down to some of this additional liquidity below, if we get going in that direction. And if we start trading up, we're going to break Friday's high. Then we're going to go to Wednesday or weekly high from last week. And then we will go to the week before that, which was Wednesday, November 15th. We'll go to that high at 246.88. And then we'll go to fair value gap close at right around 250. And then above that, there's a little bit of internal buy side liquidity here. And then we have October's high up at 269. So things we'll be watching for. Okay, our daily bias is actually neutral because Friday did not close. It closed inside of Wednesday's trading range. So technically, daily bias neutral. We are coming off an uptrend, but it's an uptrend or a bounce in a downtrend. You can see here using our auto trend line. If anybody's interested in that auto trend line, it's called auto trend line indicator based on fractals. Let me see here. It's by Doji Emoji, is the author or the creator. Auto trendline indicator based on fractals. It's a free indicator, so you can pop it on if you want. Sometimes it can be helpful just to identify, what the major trend is. But it's also something that you could completely do on your own just by drawing trend lines. So it's not anything that's, super crazy, but it's just nice to have once in a while. On there. So again, when we're looking at daily, we got our key levels of premium and discount. Okay, we have basically, break one level, we're going to the next level until we find a point of support, and then we'll bounce from there or reject from there. We have our most recent optimal trade entry was actually back here, but I think we hit our full extension or pretty close. So let's look at optimal trade entry. We'll switch to our optimal trade entry fib setting. We didn't quite get to symmetrical swing. Not sure if we're going to get there or not, but that was our most recent optimal trade entry here. And then we have not had one since this was not an optimal trade entry here. It did not quite get down to the 70.5. Did get a retracement to 61.8, so maybe you call that a good entry. We also haven't hit symmetrical swing on that, which would be 258.33 if it's going to get there. So if we were looking at the daily chart, we would say, we'd probably call this the most recent optimal trade entry, just because now we're moving up. And if we were to correct down lower, we would be looking to head up to 258.33. I do think we expect that is coming sooner than later, but that would also be breaking this trend line here if we were to get there. And then we also have liquidity above, and then we have this greater bearish resistance trend line. So that'd be like a push up to 250, 260. We'd be looking for 258.33 on the symmetrical swing if that was to play out. And then lastly, we look at, or I choose to look at fixed range volume profile on a couple different swing points. And so we got right here, our volume profile, 253.29 is going to be a volume node point of control. And that's going to be of this entire move right here. And then I'm going to go back even further, and I'm going to look at this entire move here. Oops, let's grab, there we go. You can see the volume node point of control on this move, all of this, slightly higher. It's going to be at 259, so almost at 260, right around where we expect that symmetrical swing to take us. I'm not going to label it because it's higher than the previous volume node point of control. And then if we go all the way back to like the entire year, we have our volume node point of control basically at the same level we already have mapped out at 54. So basically 255. Again, right around that range of where we're looking for price to go to the upside. So I'm going to take that off. And then again, we have our high time frame point of interest. We got our daily bias is neutral, but actually fairly bullish leaning just because of this move, but neutral because we did not break Wednesday's range. So then we're going to drop to the 4-hour time frame. And on the 4-hour time frame, we are looking for premium discount arrays that we don't already have marked off. And then we are also looking at optimal trade entry, and we're just looking at overall market structure. So again, going to zoom in here on our most recent 4-hour premium discount range, which is going to be a different look, although we're still near equilibrium. It's going to basically catch this entire move from September all the way to current price. So we came from premium, we went to discount, now we are hovering around equilibrium. And we're going to look at any premium discount arrays that we have not already marked off, but we already have, I think, everything marked off. So we got sell side liquidity here. Okay, we have buy side liquidity here in our swing points. We have Wednesday's range. We have Friday's range. Okay, so it looks like we got everything marked off. We could mark off right here some buy side liquidity there as well. Okay, so we got buy side liquidity, this one here, sell side liquidity. All right, and then again, we have our ranges here. This is Friday's. We got our Wednesday range. We got our previous week range, which would have been the week before last week. And then we have our previous month high and low. So we're inside, basically our premium discount zone is inside of October's trading range. And basically, again, we're right around equilibrium of that. And then as far as market structure goes, we have seen a break of structure here. We changed character as we went through here. We broke structure here. Okay, now we've come up, and this so far has been a high-low range, and then we're still inside of that trading range right here. And so if we use our premium discount Fibonacci tool, let's take a look at that range and then just see also where we are currently with that. So we got our premium discount range here, and you can see we've traded up through equilibrium and then back down, and then we are right around equilibrium of that range as well. Let's go ahead and look at this fib level here as well. and just see where we got back up to with these candle body closes and these candle wicks. So if we look at optimal trade, you can see we did trade up through and right above candle closing, above optimal trade entry. Actually traded quite a bit above that. And so if this optimal trade entry were to play out all the way to symmetrical swing, that could be a return all the way down to 206.60. I don't think that we're going to quite get that. I do see, you see on this 4 hour, we do have an auto trend going on, which is a megaphone pattern. I do think we could come back down and test this trend line somewhere into next week, right? That could just be a quick check of the 226, maybe 226.77 level. See if we could just take that sell side liquidity a little bit, maybe down to 225, and then maybe see a further rally from there. Again, up to here. So we'll be watching that. But as far as right now, inside of the last 2 weeks range, we are again right near equilibrium, and we did see what appears to potentially be an optimal trade entry. And so we'll be seeing if that plays out as well. And then our market structure, again, we had some bullish activity with a change of character, break of structure as we've continued higher. But we also have not taken the highs of this entire move down. So important to notice that as well. Let's take off our fib tool here. Last thing we're going to look at is the 1 hour, see if we can find the market maker buy, market maker sell model, fair value gaps, and then again, with previous day high, previous day low. We already talked about that on the other time frames. So when we're looking at the 1 hour chart, market maker buy, market maker sell model is actually going to be seen on a different time frame. So if we're using smart money concepts and we're looking at the market maker model, our 1 hour and our 15-minute chart is going to show us the move that's going to come on the lower time frame charts, if that's what you're trading. So I'll show you guys here how to identify that. Hold on just a minute. So I'm going to grab something. I'm going to drop it on the chart here. Okay. So these are the rules on the market maker buy or sell model. So when you're looking at the 1 hour chart and the 15-minute chart, and you're looking at premium discount arrays, and you're looking at different fair value gaps and things like that. I'll grab the other bit. This is the other piece we're going to look at. So instead of the daily chart here and a daily fair value gap, we're going to be looking at the 1 hour chart, and then we're going to look at the 1 minute chart to see if we found a fair value gap that we've traded into. Okay, so we're on the 1 hour chart. And so what I want to notice here is that we have a fair value gap inversion. I'm going to leave that a different color. You guys can color it whatever color you want. I just want to differentiate the fact that we got two different fair value gaps going on. So we have the fair value gap inversion, and then we have this fair value gap here. Okay, so the red one's going to be our fair value gap. This is our inverted fair value gap that's also inside of this. So if we're looking at this 1 hour or this 15-minute chart, and I know this has already happened, so it's not necessarily as relevant because we've already traded up into it and now we're out of it. But it could shed some light, and it could be something that you're watching for on your own in the future. So we're going to look at the 1 hour. We're going to look at the 15-minute to determine our market maker buy or sell model. So let's grab that guy there. And then where Where's our other chart? There we go. All right, so now you can see that. So we looked at the 1 hour. Now we're on the 15-minute, right? 1 hour, 15-minute premium discount arrays. Okay, 1 hour fair value gap. Okay, inverted fair value gap on the 1 hour, which is also a regular fair value gap that's already been closed on the 15-minute chart. But now consider where it says daily chart, where we're looking at 1 hour and 15-minute. Where it says 15-minute chart on here, our example is going to drop down into the 1 minute chart. So this would be if you were trading intraday and already had the information that I'm sharing with you right now. But what we see is we saw that fair value gap set, this big one on the 1 hour time frame, and then this inversion here as well. And then we've traded back up into it. And so that would be, your opportunity to short. But that's also showing us that our most recent market maker sell model is right here in these fair value gaps on the 1 hour and 15-minute time frame that we've traded back into. So currently, it appears that it's a market maker sell model, and we haven't seen the rest of the distribution yet. We only caught that on Friday, so we'll see if that plays out, but that's what that looks like. So now let's drop back down to the 15-minute chart. Okay, and this is something that I haven't shown you guys yet, but what we look for, you see these numbers on the side of this chart here, is a standard deviation. And so the way you use standard deviation, and this is a lesson I'll teach in the future, but if some of you guys already know how to do it, we're going to drop back down into the 1 minute chart. And we're going to look at this low to this high. And then I'm going to switch to my standard deviation tool. And there's our standard deviations. So we'd be looking for price to come potentially all the way down from this move here, all the way down to 232.91. Could go even further than that, but that's just using the standard deviation tool just on this tiny little market maker reversal here from this larger market maker sell model. Now again, for distribution to occur on that, let's check the fib levels of this as well. So from this whole move here, we didn't quite catch a retracement of 61.8, but we did catch that retracement up into that fair value gap. So if this was going also to extend down, we could potentially see 218.81 as, if this was going to catch a full leg of distribution. But if we were just looking for standard deviation to occur, we could look for price to just come back down into this order block or these double bottoms here. And that'd be pretty close to our 10 standard deviation. So we've already started to catch this. Again, if you know what you're looking for early on, like right up here somewhere, I added to my short position. I don't think I got perfect entry, but I think I grabbed it on this equilibrium, this return to equilibrium. Right? But as you watch this and you see this reversal occur, and you know how to use your standard deviation tool, or you're just watching your fib levels, then again with the standard deviation tool, we're pulling these numbers here, and then we're looking for potentially a run all the way down to 10 standard deviations. Low hanging fruit would be like a run down to 4 or 5 standard deviations, which is still going to be a $3 move on the stock price. If you're trading options, it'd be possibly like I don't know. It depends on the contract, actually. But it'd be a nice move if you only caught that as a scalp. Either way. So almost back down to the equilibrium in that case. I'll share these standard deviation settings. And for those of you who do study the smart money concepts, the ICT information directly from the website or the videos on YouTube. I suggest learning how to use the standard deviation tool. It can be very helpful to try to catch just different little runs when you can identify where the appropriate spot to put that is. And so lastly, I'll leave you with the fact that, again, we are in, based on the 1 hour and 15 minute, the most recent market maker buyer sell model is market maker sell. And that was right here on the 1 hour 15 minute premium discount arrays, as we saw price trade on the 1 hour time frame back into a fair value gap. Right? And there's our imagery right here. We were coming down, right? We bounced back up. We came back down. That's right here. We've traded into that fair value gap. We saw it on the 1 minute chart where we traded into the fair value gap. Okay, now we should catch distribution to the downside. So we'll see if it plays out, but market maker sell model is what we appear to be in, as it definitely matches up with our chart layout here on the time frame that we're specifically looking at. So I hope this has been helpful. If you guys have any questions, don't hesitate to ask. I'm available on the socials. I'm available in the Discord throughout the trading day and also through the weekend. And if any of you guys are interested in the one-on-one mentoring, I do have time slots available still, also as well as just time to consult with people if they weren't wanting like a full mentorship. You just had questions and you wanted to schedule time specifically to meet with me. Maybe there's a certain concept that you don't quite understand. You want to ask more questions, and you'd like that kind of one-on-one, but not on an ongoing basis. I do have consultation time slots available as well. So hope this has been helpful. If you guys, again, have any questions, reach out, and I look forward to seeing y'all during the trading week.